The New York Times has a story saying that this report could be the most pivotal that we've seen in years. Doug Flynn joins us, Flynn Zito Capital Management. So that sets it up. All eyes, most pivotal, but it really might be important, with the Fed coming up, the election coming up. But what are you expecting tomorrow?
Yeah, well, we had some news today, even that, that the fewest amount of jobs have been created since 2021. And so you are seeing wage growth slowing. And I think the importance tomorrow is we had 4 straight months of the unemployment rate rising, and they expect it to actually come down from 4.3 to 4.2. And the reason this is so big is because if it comes in higher than that, then people realize just how weak this economy is getting. Layoffs are starting to happen. And that means that, the Fed certainly has to act, but we're probably not as good as we even think we are. Although if it, of course, comes in lower than that, then that's good news. And that's why it is a very important one right before the election. The
report that you referenced from today, we'll put it up, is from ADP. It's a firm that tracks private sector jobs. And to your point, fewest added since 2021, right at 99,000, well below what the expectation was at almost 150, 145,000. So that it's not always the exact precursor. It doesn't always tell us what's going to happen on Friday, but sometimes it gives us a hint.
It gives you a little bit of one more clue. I mean, it is private sector jobs. Part of the unemployment rate, you do have to strip out the government jobs because the government can load us up with government jobs and make us feel like we have a great unemployment rate. But it's not necessarily true because perhaps a lot of those jobs might not be there with a different administration, and you really want the private sector to run things. But, companies are looking at a lot of uncertainty. They don't know what their costs are going to be. They have wage issues. They have a potential economic slowdown. They have potentially corporate tax increases coming depending on who gets in. So there's a lot of uncertainty. So companies are not outright hiring like crazy. They're hanging on to the good people they have, and they're slowly doing layoffs. And layoffs can ramp up quick, and that's where the Fed's going to need to act.
Yeah, Challenger Grain Christmas numbers on layoffs totaling 75, almost 76,000 for August. I mean, that's, much higher. See that 193% than July, highest in a month in 15 years. So speaking of the Fed, how aggressive can they be, not only this month, but moving forward to the end of the year? How aggressive do you think they'll be?
I don't think they're going to do a double cut, let's call it, to 50 basis points or 0.5%. I think they'll get the ball rolling, and that's really the messaging that they want to send. We can argue whether they should do quarter of a point or 0.5 point, but just the fact that they start to move is what the markets and everyone needs to see. That say, yes, we realize that things are slowing down, but we can kind of stop it from becoming a full stop and into a recession by starting to lower rates, and that begins the cycle. Of course, if things turn down quicker, they can ramp it up. There's no problem with them doing 0.5 point or even more, and it's fully expected that will be 0.5 point to 1 point lower within the next couple of months, and then 2+% lower by the end of next year, unless something dramatically changes. And that's when you start to see the activity in the housing market and people refinancing and all that stuff gets going again, and we can kind of stop people from losing their jobs en masse. And so far that hasn't happened, but that can happen. And when it turns, it's hard to put the genie back in the bottle once they start laying off people.
I know. Feels like we've been waiting for this rate cut forever. Finally should get it here this month. All right, Doug, thank you. Doug Flynn on that.